Welcome to the Tournament Poker Edge podcast, brought to you by TournamentPokerEdge.com, the only podcast dedicated exclusively to poker tournament strategy. Now here's your host, Clayton Fletcher.
Hello once again, everybody, and welcome to the Tournament Poker Edge podcast. I'm your host, Clayton Fletcher, back in New York City, and joined this week by a returning guest, although it's been quite a while. Put it this way, that no one had ever heard of COVID-19 the last time we had this gentleman on the program. He is a tax expert, a CPA, an accountant, who also has a lot of poker players as clients. So I thought that given the fact that we are now squarely into March, we should maybe talk about taxes for poker players with my old friend. Please welcome back to the program, Brad Polizzano. How are you, Brad?
Good evening, Clayton, and I appreciate you accommodating my schedule, as I have a home poker game that starts in 2 hours.
Yeah, well,
so and you mentioned the pandemic. You know, that's something that we started up once everybody was on lockdown from friends from high school. So we play online once a week, and what's great about it is there's video at each person's seat on the site. So you have instant reading ability.
That is so cool. So you're playing online with your friends, but you've also got the camera going. What site is that? It's
pokernow.club.
Cool.
And it's not meant to be a plug. I have no affiliation to it. It just suits our home game needs, and it's to my detriment that the video is available, at least from a playing performance perspective. But it's still worth it.
Yeah, you got to stop eating that Oreo cookie every time you're bluffing. It's like a dead giveaway. Don't do that. So that's cool. And the guys that you're playing with, are they some of the players that we might know? Are you playing with some heavy hitters or what?
DC Krantz is a frequent attendee.
Yeah,
so
we know
if that
Krantz.
name rings a bell.
Yeah, everybody knows Krantz. So that's cool. So
yeah, he shows up, and it's like, he's just, he's much more aggressive than the rest of us. So it adds, keeps us on our toes.
Yeah, there's always the pro at the home game that's like raising and re-raising constantly, and the regular guys are like, what the heck's going on here? But that is one of the key differences, I think, between an experienced player and people that play more for fun, is that we're just a lot more aggressive. So yeah, for sure. So that's cool. So the pandemic hit, and then you wanted to stay in touch with your friends, and you were looking for fun things to do at home, and somebody had the idea to start up a home poker game with this website. That's great.
Yeah, still going too. It's a year in. It's crazy.
Very cool. Yeah. Now, do you guys just play Texas Hold'em, or do you mix it up on there?
It's just been Texas Hold'em. We just everybody has a $20 buy-in, and then what's great about the site is that if you lose all your chips, you get cast off. Your video gets cast off the table into like the corner, and your video's there by itself because you have nothing left. It's actually pretty funny the way they set it up.
That's great. You're over there in the losers lounge. I love
exactly. It. There, much better said.
That's great. I love it. I actually never heard of that site, and just so everyone knows, full disclosure, I also am not sponsored. This podcast is not sponsored by that site. It just if a brand happens to come up in the middle of a conversation, so be it, right? So Brad is my accountant. He does a tremendous job on my taxes, which are incredibly complicated because I have income from poker, I have income from comedy, I have income from this podcast. It's not easy. And we haven't talked to you in a while, Brad, but I wanted to get you back on, just given that probably a lot of people are scrambling to try to get their taxes done. And is it fair to say that 2020 was a year unlike any other?
What would you say if I said no?
I'd say you're crazy, dude. What the heck happened? I don't even remember. It was a blur. It was like 1 minute I'm doing comedy in Vegas. I got all these big shows lined up, and the next thing I know, I'm being told that I'm not allowed to leave my house. So yeah, that was weird. But like you, I started playing online poker in a way that I never had really before, except for maybe if you count, back in, the dark ages of online poker, like 2004, 2005, I used to be really active online. I haven't really touched this stuff in like 15 years. And as my regular listeners will tell you, I've been back in the online streets with a vengeance of late. And sometimes the vengeance is being gotten by my opponents, but that's another story. So, Brad, just tell us, what's different tax-wise about 2020? Like, a lot of people got aid from the government. I don't know, small business loans. They got stimulus checks. Are we going to have to pay taxes on all that stuff? And how does it break down?
So, stimulus money from the federal government is not taxable. There's some folks whose income may have been too high when the stimulus checks, the first and second rounds of stimulus checks went out last year, early this year, and then their 2020 income decreased significantly as a result of the pandemic, and thus rendering them eligible for some money or more money than they received. And the good news is the government created a form that gets attached to your 2020 tax return that you input how much you did receive for each round of the stimulus checks, and then the form calculates how much you should have received based on your updated income. Now, if your income went up, you're not penalized. You don't have to give any back, right? So it only provides an opportunity for you to receive more, and you get it through filing your tax return. So if it's $1,500 more or $4,000 more, whatever it is, it acts as a credit when you file your tax return, effectively either decreasing your tax liability that you owed when you file, or if you were in a refund position, only increasing that amount.
Okay, that makes some sense. So basically you're saying that you can amend your income if it would benefit you as far as getting more of the available stimulus money, right?
Well, in a way, you're not filing an amended return or anything. It's just updating the government with what your 2020 income is to calculate how much stimulus money you're entitled to, because the amount that you're entitled to is dependent on it start phasing out at a certain income threshold. And when they issue these stimulus checks, it's based on your last filed tax return.
Right.
So now you're filing 2020, a lot of people's income went down.
Yeah, especially if you had a regular job or used to work in comedy clubs every night, and now you can't do that anymore. It would greatly change how much money you earned year over year. And maybe some of our listeners actually did better in 2020 than they did in 2019. So in that case, if you did have a good year for whatever reason, first of all, congratulations, doing so well during a pandemic. Good for you. And if that is you, then you would not want to change your income if you already got a stimulus check, right?
Well, to be clear, the government's not going to take back what they gave you. Okay. So it's not, you're not getting penalized because you had in at least for the economic impact payments. If you had a better year in 2020, they're not doing it. So there actually is no downside to file, well, you have to report your income regardless, right? So you're going to do it, but it's not like you're going to have to give anything back.
Right. Okay. So yeah. So if anyone's listening and thinking, I had a good year in 2020, I don't want to lose my eligibility for the stimulus check, or I don't want the government to come after that money they already paid me and say, hey, we paid you more than you should have gotten because of your income bracket or something. Don't worry, that's not going to happen. And here I have a licensed professional CPA telling you that of all the things you have to worry about, that should not be on the list, right?
Right, and I would just tell the audience to look into that. It's called the recovery rebate credit when they're filing their 2020 returns to see how if they may be able to just get the stimulus money they haven't received yet, or if they're entitled to more through filing their 2020 tax return.
Okay. So what about things like when the federal government beefed up unemployment for people who qualified for unemployment, or obviously gave out grants and loans and stuff like that? Like, how much of that is going to impact people's taxes for 2020?
It might. It depends on what was actually received. Unemployment money. There was the $600 a month that was coming through the federal government. That portion would not be taxable, but the portion that's through the state unemployment agencies is taxable income.
Okay, so some of it would be.
And you receive a 1099-G form that includes the amount of unemployment compensation received. So it just gets reported on the tax return.
Okay, cool. That makes sense. All right. So those were some of my pandemic specific questions for you. But what else has changed tax wise based on obviously the coronavirus turning the whole world upside down?
Yeah, well, as you alluded to earlier, there's probably quite a lot more folks playing online, either for the first time or more seriously than they ever have. And, I feel like I'm banging the same drum I probably did 2 years ago, but it's, technically every penny that is earned on an online site, whether it is a state regulated site or it is an offshore unregulated site, it's all taxable by Uncle Sam. So of course, there's deductions allowed if there's losses, that can, to the extent of poker winnings or, other types of games. But every penny is taxable.
Okay. So what if, now a lot of these offshore sites, they have a different way of paying. Like they might pay in Bitcoin or other cryptocurrencies. Is that a way for players who play on those sites to avoid paying taxes to the IRS?
No.
No. Short answer, no.
No. And here's the thing to just be mindful of about cryptocurrency is the authorities, not just the tax authorities, but other government, federal and state government agencies are investing a lot of resources into investigations of potential financial crimes through the use of cryptocurrency, whether the cryptocurrency is being used to facilitate illegal or illicit conduct or for purely tax evasion. I have firsthand been a part of those investigations representing taxpayers that are under investigation by the federal government for tax evasion. And part of it is us educating the agents how it all works. So I just caution to be careful. There's nothing inherently illegal just through the use of cryptocurrency. Okay, let's just be clear. But every time you at least in the U.S. under federal tax law, if you convert one form of crypto to another, so Bitcoin to Ethereum or Dogecoin or to U.S. dollars, that is a taxable event because the value that the Bitcoin was when you first acquired it compared to when you first exchanged it for another crypto or U.S. dollars, there's either an appreciation or depreciation in value of that crypto. It's think of it as holding stock and selling stock. It works essentially the same way in that regard.
Okay, so Brad, let me jump in because this is really interesting to me. If you invest in a stock and the stock goes up, but you don't sell it, you don't have to pay taxes on that until you sell it. So, but what you're saying is, if you convert one cryptocurrency to another, or sell it for dollars, that's the taxable event because that's when the gains are actually realized, right?
You're using like technical legal terminology without even realizing it.
Am I really?
It's the amount realized is actually like tax tax lingo. But yes, think of it as if even exchanging your Bitcoin for Ethereum, that is under the tax law the equivalent of selling stock. And so you have an amount realized. So, and for the high volume traders, it can become a record keeping nightmare. And to pile on, if one is commingling crypto, the same type of crypto in a wallet that they're acquiring in different tranches, which is very common. You're acquiring crypto at various points in time. The amount that it's acquired for is always going to be different, right? We call it the cost basis. How much did you pay? What's the US dollar equivalent of the crypto that you acquired, right? It would just be whatever the fair market value is on the day you acquire it. The issue is then let's say you have 10 different, Bitcoin. I say 10 different Bitcoin, but just for simplicity, you have 10 tranches of Bitcoin that you acquired at 10 different points in time, and they all have different dollar cost, right? Then let's say you sell one or convert one to US dollars. Which of those 10 cost values do you use to calculate your gain?
Oh, gosh.
Right?
Yeah, that's a pretty hard question to answer, right? I mean, I would want to use the one that was highest.
That would be the ideal answer. However, what the tax law says is unless you can specifically identify the one that you're selling within those 10 as the one that you acquired, if you can match them up, then you can use that cost. But if you can't, if they're not segregated, if you can't prove that and they're all commingled, then you have to use the oldest cost. So the first one that went into the wallet. And, based on the current Bitcoin trajectory historically, there's a likelihood that oldest Bitcoin in your wallet has the lowest cost. Now that may not be in fact the case, but generally speaking, let's just assume it is, then you're going to have the largest gain possible on the sale of that one because you're using the one you're applying the one with the lowest cost.
Wow. Yeah, I mean,
does that make sense?
Yeah, it does. It's bad news, I think, for a lot of our listeners, especially those who may have thought that getting into cryptocurrency was kind of a shelter from all of this government stuff. So, and what is the appeal of investing in Bitcoin or Ethereum as opposed to traditional stocks and mutual funds and things like that, if not to kind of be off the radar?
You're asking the wrong person. I mean, personally, I really can't bear it because, and I'm just one person, one man's opinion, but it's a market that never sleeps, and I just personally, I know I would always be distracted by it or paying attention to it.
Yeah. Well, I mean, Brad, you count the pennies for a living. So, I mean, for you, something that is so wild and volatile, and like you say, it's a 24-hour market, 365 days a year. Yeah. So you would constantly be checking how much has my Bitcoin moved, and it moves a lot. I mean, it's gone crazy. In the last 12 months, I think it's quintupled. But just last week, it lost like 20% of its value and then went back up again. I mean, this is just those who are experienced cryptocurrency investors out there, they know that the volatility is, shall we say, par for the course.
Right.
But, yeah, I mean, as fast as it can go up, that's how fast it can also go down. But, yeah, I think that many people have a misconception about Bitcoin and other cryptocurrencies as them being sort of exempt from or somehow hidden from the government, and so they don't worry about the taxes. But what I'm hearing you saying now is that the government is actively looking for people who are trying to do things that are against the law using Bitcoin.
Just look at the first page of the 2020 tax return. I know you study it every day, Clayton.
Always. Yeah, it's like how else can I get out of bed?
You look at the first page. Halfway down, there's a question on the first page of the 1040. Have you received, sold, sent, exchanged, or otherwise acquired any financial interest in crypto in virtual currency during the year? Yes or no? You have to answer that question affirmatively on your tax return in 2020.
Wow. Okay.
That's where this has come to.
Yeah. So once you answer that new question, which obviously cryptocurrency itself is relatively new, but now I guess the government is finally, trying to get their fair piece of the pie or whatever. Once you answer that question, I assume there are going to be other questions to answer, like how much Bitcoin did you acquire, sell, or what did you call it? Virtual currency. Right?
It's not like there's, follow-up questions on your return. It is just a yes or no. And, people are going to say, well, if I say yes, then I'm going to get audited. And the reality is, while there might be some small incremental chance that that's the case, I don't work for the government. I can't speak to what their intentions are with this data. Maybe there's an incremental chance. As one trading, if I were one to be actively transacting in cryptocurrency, I just think I'd sleep better at night knowing I said yes with an incremental chance for an audit than saying no and potentially being investigated for tax evasion. Maybe that's just me, but going through what we'll call a civil IRS examination where there's no they're only examining the return for the accuracy. They're not suspecting that there's an intent to evade taxes. That, comparatively speaking, is much less painful. Now, maybe going through an IRS audit sucks generally. I get it. I represent many taxpayers that have undergone them or currently in them now. I'm not saying it's an ideal place to be, but relatively speaking, it would be.
All right. So the message there, better be safe than sorry. Don't lie to the government. Answer that question honestly, and then if they want more information, they'll get it. But Brad, I read somewhere, I've always wanted to ask a tax expert about this. I read somewhere that the government already knows exactly how much all of us made. They have that information already. So why do they make us fill out all these forms anyway?
Specific to crypto or just in general?
Just in general, but yeah, also with crypto.
Well, no, they don't know everything. I mean, they know if you get a form from a payer like you do for your comedy shows or from the regulated gaming website, if they issue you a W-2G, yes, the government has that information, but they don't get everything.
Okay. So that's why it's up to us to fill in those blanks for them, right?
Yeah, and you're putting it all together on a tax return, right? So there is a vision. The IRS one day will be able to essentially prepare returns for taxpayers using that information that they get. But the government doesn't know how much, Clayton, that you donated to charity last year. That's not reported to the IRS. Or your business expenses. That's not the only way they find that out is when you report that on your tax return.
Yeah. Yeah.
There's no separate form that goes to the government because you had to take a trip, in your car from point A to point B for a show.
Right. Yeah. Now my listeners know that I am an amateur crypto investor only because one of the offshore sites that I won some money on, when I went to cash out, that was the only way that I could get to work was the Bitcoin. So I ended up getting, a certain amount of Bitcoin from my cash outs. And that was back when Bitcoin was at $10,000. Now it's gone up to $50,000, which has done a great job of offsetting some other losses that I've had this year. But if I haven't sold that Bitcoin, then I don't have to, because I haven't actually realized, right? So that's kind of my personal situation. Like until I sell it, I'm not going to be taxed on the gains.
Right. There's two taxable events that we're talking about. One is when you receive the winnings in the form of crypto. Just because you receive it as crypto doesn't make the recognition of the winnings any different. So like the actual gaming winnings, that's still income, right?
Sure.
But then you have this asset and you're holding it, and you haven't exchanged it for other crypto, you haven't converted to US dollars, correct, you're not recognizing the capital gains on that yet. That's right.
Okay. Yeah, and I mean, I know you and I are going to go through all this privately, but obviously,
I think we pretty much have already.
Yeah. Okay. So we're done. You could just send me an invoice. Yeah. No, I wanted to share that more openly in this public forum because I think that these things can get complicated, and I think that many poker players they might need help with this stuff, especially if you are like me and you weren't already active in the crypto world. Prior to sort of necessities of the pandemic causing me to, be accidentally thrust into that world, and then, just being the luck box who happens to see like a 500% return on investment from the crypto that I got. Although, like I said, I haven't sold it yet, and it could go all the way back down to where it was tomorrow. That is definitely a distinct possibility in this wild world of cryptocurrencies. But I want people to hear what you're telling them, Brad, which is, this money is not hidden, it's not sheltered. It's the law says that you have to report those events, and so I want to try to help some of these poker players out there that might be perfectly innocent, but not realizing that they have to report that, even though they were not paid in U.S. dollars. You still have to report it, right?
Correct, and now what's really taking off. I don't know how much you've dabbled in this space with the non-fungible tokens, and these crypto assets that you can acquire, that are essentially static online. NBA Top Shot, for example. Again, not a sponsor. I have no connection to it, but it's just blowing up right now. Have you heard about this?
Yeah, I don't really know what it is, but why don't you inform us?
So, well, it's related to crypto in that, so they're basically digital cards of NBA players, but they're highlights of NBA players, and they use this crypto technology, as it's called, this non-fungible token, and if anybody is even a quarter of the way in understanding it all, they're far beyond me, so I'm probably butchering how it all works. But basically, there's a unique identifier to each of like these cards. So they might release like 100 LeBron James in these sets of packs that they're releasing that you buy, but each of one of those hundreds has a unique identifier in the blockchain that makes it that identifies it to be unique, so it can't be like copied. So there's only like 100 in existence in circulation. But there's on NBATopShot.com, there's a marketplace where you can buy and sell these cards. They only stay on the website. You can't take them off the website. You can't do anything with them. You have a collection on their website of these cards, and people are selling them for 3, 4, 5, 6 figures each.
Wow.
It's insane. It's insane how this is blowing up right now. And when they released these packs, there was supposed to be a pack release tonight, but I don't know if it was because of they're getting so much volume on their website that they postponed it. But there's like 150,000 plus people waiting in line to try to get a pack for $99 that they're only giving 5,000 packs away for. It's just the demand is just spiraling out of control,
and the supply is scarce.
That's right. So what it does though, it introduces another interesting nuance in the tax law. Is when you sell that, even if you sell it for crypto, US dollars, whatever, it falls under a different tax rate for collectibles. There's a special tax rate of federal tax rate of 28% on gains or income from the sales of collectibles, which would be a higher tax rate than if it were just stock or cryptocurrency that you held for at least a year, because that rate is caps out at 20% for federal tax purposes. But
boy,
you have exchanging these digital assets for cryptocurrency itself. I was looking at it, I think just last night, like Mark Cuban has his own page where he has like 300 plus of these assets, not NBA Top Shot, but just like digital paintings and images that people are buying in crypto, and then they're like, putting them on this online collection, and it's just
a brave new world, Brad.
There you go. I mean, I think part of it is that we're living in this virtual environment, and there's not as much of a demand for like having something physical. Like you get something virtual, and you're interacting with this virtual world that we're all dealing with day in and day out anyway. So I think that's it's just gravitating towards that. And you layer in cryptocurrency technology, like I think that helps drive the appeal too. So
yeah, sure. I mean, crypto is changing the way a lot of things happen. But, anyone who's known me, I mean, since the 1990s, I've always said, if it's not fungible, I'm not interested. That's just kind of my rules that I live my life by. After this call, I'm going to figure out what fungible means. But I'm sure I don't like it. I want everything to be as fungible as possible. Is that normal?
I get it. I mean, it's not what we grew up on. It's not what we're used to. It's totally disrupting that mentality.
Yeah. Well, it's definitely a different time and a different world. And, we're doing comedy over Zoom. We're playing poker on Zoom. We're everything is Zooming. So, obviously the government realizes that, crypto is becoming more mainstream every day. And so naturally they are finally trying to learn more about it and understand how it works. I know more than one person is going to be upset with you for admitting that you helped them learn how it all works, because we were hoping to keep them in the dark for as long as possible. But apparently the word is out. So what else, Brad? I don't want to keep you too long, but what else do you think is important for our listeners who are primarily professional and semi-professional poker players out there? What do they need to know?
Well, that there's something called foreign bank account reporting rules. It's not part of a tax return. It's called the FBAR. It's a separate form. It has the same due date as the tax return, April 15th. But basically, a taxpayer that has at any point during the year at least $10,000 US or equivalent in what's called a foreign financial account, that has to get reported on this form. It's an annual reporting, and failure to do so is $10,000 penalty per account per year. At a minimum, that's a non-willful penalty. Penalties could spiral out of control if it's failure to file or report is called willful. But I say that because offshore online poker accounts are arguably subject to those rules. US dollars on foreign cryptocurrency exchange accounts. So cryptocurrency exchanges that are not regulated by the Fed or states, but are regulated by countries outside of the US. That would be a foreign account that might be reportable. So I just even if there's no income, there's the IRS and other federal agencies have these reporting rules because they're trying to gather as much data for enforcement purposes. So just another fun thing to be aware of.
Yeah, they're trying to follow the money, and if they think you're trying to make that harder for them, they're not going to be too happy about that. And they always say death and taxes, right? Those are the only two things that we can count on that are guaranteed in life. So, well, Brad, I really appreciate you coming back on the podcast. And let me ask you a question. Are you looking for more clients? Do you have room in your schedule? If any of our listeners might be interested in some help with their 2020 taxes, can we refer them to you, or can you point them in the right direction?
This is what we call March Madness for us right now, and it's not the college basketball tournament I'm referring to.
Right.
Look, I'm always at a minimum. I'm always willing to see if I can help, or if I can't due to capacity or other reasons, find somebody else to be able to help. So if somebody's looking for help, I'm happy to have the conversation and see what we could do.
All right, and you could tell him that I sent you. I like to follow Brad on Twitter. He's TaxDood, which is TaxDood. Is there any other way that you like to be contacted, Brad?
I'll give out my email address. It's Brad at taxdude.com, TaxDood.com. I'll also just mention I have a podcast going myself, Clayton. It's a sports podcast that I do with one of my buddies, and we've recorded now, I think we did our 90th episode last night. We've had hiatuses here and there. It's really just for fun. It's two guys mostly talking about, New York sports or anything interesting in sports going on. I'm always curious for, constructive feedback on the dynamic. I think we take an approach that's somewhat unique, and we've known each other for a really long time. So you could sense that like camaraderie and connection. So I should say what the name is, right? It's called Hip and the Lip.
I like it. Hip and the Lip is the podcast. Brad at taxdude.com is the email address. At taxdude is the Twitter handle. And it's my friend, my CPA, my sports buddy. We also do talk fantasy, baseball, and sports. I can tell you Brad knows a lot about sports, and particularly New York sports. And I am going to check out his podcast. And I can tell you one thing about our listeners, Brad. If you're looking for feedback on your dynamic or on anything else, you'll get it from these guys. So check out Brad's podcast as well. Brad, anything else you want to say before we say goodbye?
Just saying, if you made it this far, thank you for staying awake.
So for Brad Polizzano and for everyone here at Tournament Poker Edge, I'm Clayton Fletcher. Thank you so much for listening.
Hold 'em like they do in Texas plays. Fold 'em, let 'em hit me, raise it, baby, stay with me. Luck and intuition, play the cards with babes to start. And after she's been hooked, I'll play the one that's on her heart. Oh, whoa, 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 whoa. I'll get her heart, show her what I got. Oh, whoa, 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 whoa. I'll get her heart, show her what I got. Can't read mine, no she can't read a mile. Poker face, she's got to love nobody. Can't read mine, no she can't read a mile. Poker face, she's got to love nobody. Poker face, poker face. Poker face, poker face. I wanna roll with her, a hard pair we will be. While little gambling is fun when you're with me. I love it. Russian roulette is not the same without a gun. And baby, when it's love, it's not rough, it isn't fun. Oh, whoa, 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 whoa. I'll get her heart, show her what I got. Oh, whoa, 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 whoa. I'll get her heart, show her what I got. Can't read mine, no she can't read a mile. Poker face, she's got to love nobody. Can't read mine, no she can't read a mile. Poker face, she's got to love nobody. Poker face, poker face. Poker face, poker face. Can't read mine, no she can't read a mile. Poker face, she's got to love nobody. Can't read mine,